Hey everyone, hope you're doing well. This is Adam Vernon with Vernon Management Group. I'm an investment advisor representative, and today we're going to be looking at the QQQ, which is an ETF. It represents the largest 100 companies on the NASDAQ exchange. Also, we're going to be looking at a weekly chart, which means each one of these lines right here represents 1 week of price movements, and this little horizontal line on each line is the closing price for the week. Today we're going to be talking about trend lines and moving averages. And as you can see here on the chart, we have a 10-week moving average and the 40-week moving average. For our purposes, we're going to use the black line, which is the 40-week moving average. Whether you're new to investing or you're an experienced investor, investing is all about decision making and knowing when to buy or sell. There's countless investment strategies out there, and today I just want to keep it simple. Today's focus is on using the 40-week moving average. Specifically, if the QQQ closes below the 40-week moving average, you sell, and if it closes above, you buy. Alright, so I'm going to start off during March of 2020 during the COVID correction. And as you can see here, this is the first time where we closed below the 40-week moving average. So this is our sell signal here at 192, right? You can see that closing price right there. And that means we wouldn't be buying back until we closed back above the black line right here at 215. And what this helps with is you avoid the drawdown. And we'll look at that more in a minute. But so you buy back here at 215, and then that means you're going to be in for the whole rally up. You can see that the Qs come close to touching and going below the black line, but they actually never do. So you're in for this whole rally up to this point here, which I'll highlight for you. Right here. Here's our next sell signal right there. Hey, real quick, if you're interested in learning more about what we do, you can come to our website, vernonmanagementgroup.com, and click right here for a free consultation. And that is at 351, right? So we bought back down here at 251 and we're selling at 351 right as it closes under the black line. And what this does for us is something really important. We avoid this huge consolidation period, right? So all the way down here, we're out of the stock because it closed below the 40-week moving average and doesn't cross and close above it until, let's pull it up again, right here. Here's the next close above the 40-week moving average. And yes, this is a more long-term trading strategy or investing strategy, if you will. But what it does for you is you're not in during these big periods of consolidation or correction periods. It limits your drawdown, which is, in my opinion, very important when you're investing. You don't want to lose 50% or more of your capital, right? So let's go back to here. We buy back at 296. And remember, we sold up here at 351 and now we're buying back at 296. And then we have a couple weeks in here where we cross barely below the 40-week moving average, but then we buy back relatively quickly. And we ride it all the way up until here. And this is kind of a big point for the Qs because we came close to crossing and closing below the 40-week moving average again right here at 345, but we actually bounced off the 40-week moving average and continued even higher and higher. And this is kind of something that's really a good sign, for a stock or ETF, not just the Qs, but if we bounce off the 40-week moving average, it means, okay, investors are still confident about it and the chart is strong. But if we cross through it, it's a bad sign. It's not a make or break, either way, but it's just another indicator that things are going well or things are going poorly. There's two main takeaways from this 40-week moving average. One is that it can help to limit your drawdowns. Obviously, it's not guaranteed. Nothing's guaranteed in the stock market. And the second thing is it's going to tell you what the trend of the stock is or the ETF, right? So in the Qs, you can see with the big rally up, It never crosses back below this black line. And then when it starts to go into correction, cross right through it. And then when a new rally starts, we're same thing. We don't go below the black line again. So it gives you kind of this bird's eye view of the macro trend of the ETF. Thanks so much for watching today. As always, this is not a recommendation. These videos are for entertainment purposes only. If you have any thoughts, comment down below. If you want to see more stuff like this, subscribe to the channel.